The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We start out the show, as always, with the German DAX, and as you can see, we're under a little bit of pressure. Much to be expected considering that we were down 400 points or so in the Dow yesterday, but they're actually holding up relatively well. If we go just a little bit farther south, you'll get down to the London market, the FTSE, and you'll notice that we did make that Gartley down there yesterday, and then we've had a little bit of a bounce. We're basically unchanged to up a little bit today in the FTSE. Folks, there's something really big happening here. I don't know if it means anything or not, but I'm going to share it with you. Here's the chart. I'm just going to show you an example. That's really what I want to show you. Here's the chart of Facebook that we were looking at. Remember, we had that big gap down because of whatever happened. I don't remember. Then you'll notice that at point 1, we were making a 38% retracement, and that set up the potential ABCD pattern down there at 136. We're trading around 154 right now. That's what that's looking at. Now, I'm going to show you a chart that is even more bearish than that, and it's very important because it's one of Warren Buffett's favorites. Let's take a look at it here, folks. This is the Dow Jones Transportations. And as you can see here, we had a 382 retracement on that 3-day rally. We gapped down yesterday and then closed right near the low of the day. If we take out those lows down at that 10,350, that sets up a big move to the downside. Now, the reason why this is so important is the fact that it came down so hard, so fast from the exact 382 retracement. Why Mr. Buffett was so talked about this so emphatically on CNBC a few years back was that the Dow Jones Transportations, basically, they have a inside information of where the orders are going and where goods are moving. And if you'll notice, this index is quite a ways from the high. And not only that, but it's coming down very hard. And of course, the airline stocks are all getting hammered really badly. So they may see something out here. I don't know. But if we get below that 10,350 in that transportation, that sets up another 7 or 8% to the downside. Whether that'll mean very much or not, I'm not really sure. Now, yesterday in the stock market, we hit the exact number in the Dow Jones. I know we were down 460 points, but what we did is we stopped right at the 61% retracement of that low that we made on October the 11th. It was, you can see it right there, to the exact tick, 25,240. And so far, we've had a pretty good rally here. We rallied several hundred points, we've rallied, 250, rallied almost 300 and some points off the bottom. Now, this is going to be important because if we do fail from here and we go below that level, that's going to tell us that we could be looking at something even more sinister. If you'll remember, at the beginning of the week, we talked about the fact that this is an up-to-date chart, by the way. You'll notice that Russell E-mini, it made a perfect 61% retracement. Oh, I've got these marked wrong, folks. The 618 should be where the 786 is, and the 786 should be where the 618 is. Color me bad on that one. Sorry, they are wrong. It's the first one is the 786 that's listed as 618. That's actually the 786. And the 618 comes off the February low. But look at they're both absolutely perfectly spot on. So pay attention to that. We had a little bit of a rally, and we closed, going to be up a little bit this morning. But any move below that 152 level sets up a much deeper market to the downside. Whether that Dow Jones Transportations is going to mean a whole lot, we really don't know for sure, but we'll have to at least keep an eye on it, if nothing else. We had a pretty good break in the crude oil yesterday. We're getting a little bit of a bounce today. it was funny because Bloomberg said, you know, the price of oil had stabilized. When I looked at it, it was actually 40 cents off the bottom, but because it closed so low and was up a little bit today, it looked like it was up, which it was, but not very much. Anyway, that's neither here nor there. We'll do one thing at a time as we look at some of these through this. But the crude oil complex has got some major problems. We've talked about this before. We've highlighted it in several different things. For instance, the gasoline contract, if you'll notice here, this is the one we were looking at over the weekend. This is the one where we should have had that point D. And here's the same type of example like what we have here in the Dow Jones Transportations. You'll put this up and you'll see what happened here is you got a nice 3-day rally that really went nowhere in the gasoline, and then all of a sudden, bang, you're down below, not only below the 618, but you're below the ABCD structure. That is not a very good sign. That means that you've most probably seen the cycle high come in real early in the session, and that means that you're most probably going to be heading lower. Remember that we do have a new moon coming up here on the 24th. And what I'd like to do now is just go down memory lane to talk just a little bit about the market from 31 years ago. This is the October crash. I want to just share it with you. Not many people were around, but I want to bring this up because it's important. You'll notice here, I got this from stockcharts.com, just took it off the internet, but you notice those 3 little circles there where the line is, where you had that triple bottom, and then the market came down through it. That low there before the gap, that's Friday, October the 16th. That's where the options expired. And then, of course, the market opened lower. Now, the S&P was trading at 283, I believe, on the night before. And as you can see, it opened down at 243. That was equivalent to 40 handles at $500 a piece. That was $20,000, and it went down another $20,000 from there. And then, of course, it's made its low on the 20th. And then that low on the 20th, folks, was an exact, I mean, to the penny, from the low that we made on August the 9th of 1982. That was a perfect 61% retracement in the S&P and the Dow Jones. If you don't believe it, go in and prove it for yourself. But the Dow was trading at just at 1600, and there it was, right there in boldface type. And from there, we went to, so far, 26,000 and change. So this is something that I think is important. That day, and not many of you folks were around that day, but it was very, very scary because you didn't know whether you were going to get your money out of your account because, I mean, you couldn't even get floor brokers to go into the pits because it was so dangerous. If we take a look at what really happened here, this is an interesting chart. And basically what it's telling you here is that you can see what happened to the price of bonds as the price of stocks was collapsing. Well, what really happened on the day when the Dow was down about 300 points, it ended up being down 506 points that day, but was down about 350 points. I happened to be long bonds, and the bonds were down about a half a point. So I was still ahead because I bought them pretty good, but they were underwater. The problem was, I'll tell you what the problem was when we get back from the break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and I was going over what happened during 1987 in the bond market with the Dow down almost 400 points that day, which was down about 15%. The bonds were trading down about a half a point. I bought them a few days earlier, had a nice profit in them, but they were down on the day. And I got nervous because I was afraid some of these brokerage firms were not going to make it. And so I wanted to get my money out as quick as I could. So I sold the bonds. And I won't even tell you what happened over the next 2 weeks. The bonds went straight up for 11 days. I mean, it was a mess. I think they moved 14 handles. In 11 days. That's a huge move. Of course, I was standing at the curb. I was just happy we got through it all. The reason why the bottom came in, if you'll remember, there was this thing called the plunge protection team supposedly was put together around that time. Whether that was true or not, I really don't know. But now we have these position limits. I'm going to show you what the limits are for today. It changes daily, but you'll notice that if the S&P goes down 7%, they halt trading. If it goes down again, they halt trading again at 13%, and they do it again if it goes down 20%. Folks, 20% when something's trading at 2,700 means the S&P would be down 500 points. Boys and girls, that's a lot of money. That would hurt a lot of people. But no matter what happens, in 2000 and in 1987, that was the best buying opportunity in the last part of that decade, because it was a perfect 61% retracement, and of course we still went up there. I don't use a calculator; I use my fingers and toes, Bill. So these wild markets that we're having, and I was involved with the Hong Kong market last night with some friends from Hong Kong, because the Hong Kong market gapped down 2%, stayed there for about 10 seconds, and then started rallying and ended up being about 1.5% higher. So we had a 3.5-point swing in the Hang Seng Index coming off of that major bottom that we've had down in here. So it's going to be interesting to see if this bottom is going to hold it. We'll take a look at this Hang Seng. You'll notice that we had that 3 drive to a bottom pattern that was coming in, and then the market gapped down sharply. Well, what we did last night is we went and matched the low of October the 11th, and then we closed still up on the day, but just slightly. We're still in this zone here where we've been all week long, but we did close in the upper part of that range. Whether that's going to be positive or not, I don't know, but this spin is very oversold, and so we could get some type of a bounce without any trouble. We hit major fib points, as you know, not only yesterday, but again on, Friday of last week. So that's either a major test in here or it's going to fail the test, and then we will see, what happens. But if the market closes really badly today in the stock market, do not be long stocks over the weekend, folks, because something big is going to happen. And we say that because if you watch the currency markets, you're seeing markets that have a tendency to have really big patterns unfolding. We've talked about this in the euro. We've talked about this in the dollar index. Just about everything is lined up. The euro has broken below that coveted 115 level. That sets up a test of the 112 level. And the dollar index is trading above 96. So that's, the possibility of 104 in that. So any of those things could be triggered by just about anything. So we need to be, very, very aware of, what's going on. If you'll notice, this is the one that, this is the combination of the New York Stock Exchange Index and the NASDAQ. You'll notice that the New York Stock Exchange Index made the exact 786 2 days in a row, and that was off the February low. I mean, that was perfect, folks. It was right on. And then we had a nice 3-day rally. We had the pullback yesterday, which was right at the 78% level. So this is either the major test or this is all we're going to get, and we're going to head down lower. And I think you have to see how the market closes today, because if it closes strong, that bottom is most probably in, and we're going to continue higher and probably for right into the new moon of the 24th. That would be the way I would assume. But this index that we're looking at here for the Dow Jones Transportation, if that's a bear trap, boy, it's a good one, because it certainly looks bearish to me. But they fool me a lot. So just pay attention to those things, because it's going to be interesting to see how they line up. Gold and silver, still up in the area. Gold's up around that 1231 level. Silver's around 1470. There again, these markets are acting like they want to go higher. Now, if you want to think about a crash, you really have to think twice. And the reason why is just look what's happened to the volatility index, folks. Let's just look at what happens here on the volatility index. I mean, with the market down 460 points yesterday, this thing could hardly even budge. That's a sign that there's not very many people that are scared out there. That's really, what that's telling you. So I think that, maybe it comes, maybe it doesn't. I don't know, but this is the anniversary date of something that was really big, 31 years ago. And I can bet there are not many people out there remember it. And boy, I certainly can remember it, because it was a scary time. And I was on the right side of the market, and I was still scared. So that's how tough it was. Anyway, we'll see. That day there were more bankruptcies on the CME than ever before. The guys that they always leverage their seats, and it was really a bad time in the market for those folks. And it was, I don't know if you really know this, but the reason why the market turned on October the 20th is because supposedly the Fed protection team, which I believe was Rubin and Greenspan, and I can't remember the other one, but what they did was they changed the accounting for the banks, so the banks could market to market. In other words, if they were long some stocks, they could put their orders in wherever the market was at that time, as opposed to marking it to cost, and that gave them buying power. So that basically opened the vaults to start buying, because Greenspan basically told the big banks, look, it stops going down now, so start buying. And that's pretty much what happened. So we'll see what happened. Anyway, that was exactly at a 61% retracement of the 1982 low. I suggest, if you don't believe me, just go in and check it yourself. You'll see the beauty that some of these fib numbers have in some of these markets. So we'll pay close attention to that. When we get back, we're going to talk just a little bit more about the Treasury bonds and Treasury notes. And also we need to cover a couple of these currencies that are having some pretty good movements here. And then we need to talk about the Nikkei Dow. And so we'll be back after we get this break in, and then we will talk some more. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look at the Nikkei Dow. As you can see here, we made the butterfly pattern a few weeks ago. Then we've had the correction. We had a little bit of a bounce, and then you can see what happened on Wednesday. Today's market was sharply lower in the Nikkei. It didn't bounce back like the Hang Seng did, so it has broken below that point. Whether it continues from that level remains to be seen. Now, I've been asked to take a look at the XAU, which is the gold-silver index. And if you'll look at this, you'll see that we've completed an ABCD pattern in the XAU, the low being there on September the 10th, the high, of course, back in July. That retracement was exactly 50% in perfect ABCD format. That usually means that you're going to have some type of a pullback, and we would certainly be welcome to that if we could see the gold get down to around that $1,200 level, or maybe even just 1210. So we'll keep an eye on those. They're key figures to watch, but right now they're holding up relatively well. We've got the gold around 1232, silver around 1570, the old high, of course, being 1495. And if we get above that, we're going to have gain. We're going to see 1240 to 1260 in the gold without too much trouble, would be my opinion. So those are the main things. Folks, the key to all of these markets, in my opinion, is what's going on with the currencies. And as you know, that the U.S. dollar is in relatively good shape compared to the other currencies. If we take a look here at this weekly dollar index, you're going to see here that we completed that ABCD pattern down there at 93.50. That's the one we saw on the daily earlier in this show. And now we're trading back above 96 now. And anything above that, 96.80, takes us sharply higher, because it's going to be really interesting to see if this dollar continues to be strong. No question that the euro failed at the 115 level. We hit the 115, we rallied up to 115.40, and then we gave up the ghost. We dropped 100 points just very, very quickly. We're now trading around 114.60. That's a bearish pattern. We have bearish patterns in the British pound, even though we did hit some major support. That's been a very good, if you want to trade a currency, folks, that is, relatively mild, and, it's not crazy like most things. You'll notice here you have a daily chart of the British pound, and as you can see, when we made the big bottom down there at 127, we had several patterns, then we had to rally back. Perfect ABCD format, stopping at the exact 78% retracement of the June high. What do we do? Another ABCD pattern to the downside, stopping at 129.30, and then going back up to test the 78% level at 132. And now we're setting right at that trend line at 130, because if we break below that 130 level in the British pound, we're going to be looking at something pretty sinister. Now, the news coming out of and if you can believe the news in any country, that's not usually the thing to do. But they're saying that it's going to be a slow movement out of Brexit. Whether that will happen or not, it changes daily, but that's what they're saying right now. But a strong support at 130 in that British pound. So, it had a very quick move from 130, 230 down to 130, 30. So it's giving you a pretty good idea that this should be some pretty strong support. Anything below that 130 level into the 129 takes you to much, much lower prices. And so we'll see that. David, you're talking about Piggly Wiggly. When they went bankrupt, about 10 years ago, one of my associates over in California, one of my old Drexel customer, wanted to buy Piggly Wiggly off the pink sheets because he thought that they had a lot of really good property, and he didn't think that the bankruptcy was really important, and he bought it on the pink sheets, and he made a lot of money because he was right. There was a lot of money in the real estate. Now, I don't know if Sears is going to have that same thing, because they were in the wrong place. That's basically it. But can you believe Sears is gone? Montgomery Ward's gone. Pretty soon JCPenney's going to be gone. Toys R Us are gone. Oh, my goodness. Holy cow, what are you going to do? All right, let's move on here and take a look at one of the other markets that we want to talk about here. And that is, of course, the let me just get this up here. Oh, you know what I need to do this morning? I need to check the opening here, because we have real important spots here to watch this morning. And that is, hold on one second. We have a caller coming in. Let's just double check here. Thoughts on soybeans? Okay. the soybeans stopped right where they should have, but the one that was real interesting was the corn. The corn was by far the easiest of all of them to tell you that there was something really big happening here. Look at this, folks. This is one of the things we did for the 24/7 service. You'll notice that right up there at that 77 area, we had a perfect equal rally. We had an ABCD pattern, and it went right up to it and then backed off. And it's backed off about 10 cents. So that's what we were watching. We're going to see what happens here. But beans are coming down. We went from 8.91. We've dropped about 30, almost 30 cents. So about 36 cents lower, down around 8.63. You want to keep an eye on those because wait, see 30. No, that would be 8.58. Watch the beans at 8.58 in the November. But I would be ready to switch over to either January or March soybeans because these Novembers are going to come into delivery pretty good. But we're still in October, so until the 1st of November, you're pretty safe. Pretty safe trading them. So that's what it looks like. Another one that looks really interesting, Mr. Z, is to keep an eye on one that we've been relatively patient on, and that is the Christmas wheat. And if we can get that Christmas wheat down around the 495 level, that would be down at a triple bottom, as you can see. And if that happens, when we come into this new moon on the 24th, that's only 4 trading days away. That would really be what I think would be good value. What you'd like to see is a trade below 495 in the D-suite, and then it to close higher. So that would be one that I would be watching also. So it could have some really good potential to the upside. The beans have been very good to us, especially the soybean oil. As you recall, on the soybean oil, we had a absolute incredible 3 drive to a bottom pattern, much like we did in sugar and coffee. And don't ask me about the coffee because it went from 96 to 125 today, folks. That's 30 handles. You don't see moves like that very often. Unfortunately, at 18 handles, I thought it was a fabulous profit. Anyway, you'll notice here that soybean oil got up to that 29.75. We didn't quite get down to our level of 28.25. We're trading around right at 2,900 right now in the oil. So if we get down there, we want to certainly keep an eye on that soybean oil. That's one of the ones that we'll review over the weekend to give us an idea whether it's going to be a pretty good spot to look at. I want to cover the December hogs when we get back from the break because that's another one that's been incredibly good to us, and we want to review that because it's got some really good potential here. We'll just show you what we were looking at for the weekend here. We were watching for these Christmas hogs to come down. We'll talk about December hogs when we get back. 877-927-6.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and I posted the chart of the December hogs. And what I'd like to do now is to update that where we are as of yesterday. And you'll be able to see here that we're getting really close to this area of around $50. Now, remember, they've gone from 60 down to 52 in the midst of a disease over in China. So, you know, what they tell you and what happens is a lot different. So that's one of the advantages of being a technician is you look at the price charts, and that if they're buying, prices are going up. If they're selling, prices are going down. And as you can see here, we're getting down to a really close to a 61% retracement here in the DSOGs, down at the $50 per pound level. You notice a 3 drive to a bottom pattern that we made in August. That was compliments of our good friend Mr. Z in the room, and also Rich Anderson of Anderson Capital Management, who has just been recently retired. He's still working as a trading, of course, but he's really scaled back everything. So hopefully we'll have Rich on one of these days when he wakes up before noon. And anyway, keep an eye on these December hogs. They're down 2 cents from where we are right now. Should be some really strong support, because after that bottom is in, we had the nice run, and we're going to be able to see if it's going to have you know, any type of follow through from the upside. So we'll keep a close eye on it. We're a very strong market today. That pretty much verifies that that bottom that we had yesterday at the exact 61% level was a very, very important bottom. So we need to watch that, because it is a spot that will be etched in infamy, because if we go below it, we're going to be looking at something, substantially a lot worse. The Dow Jones Transportation's opened unchanged. They did not gap down. That's a good sign. So they've held that bottom so far. So that's another thing that we want to keep in mind. So we'll watch those one at a time. But, I think that we've got these the volatility that we're going to see here, folks, for the rest of the month is really going to be quite amazing. To see the market move, like it has. I mean, it didn't do much yesterday. It was only down 1.5% and stopped exactly at the 61% level when it was down 460 points in the Dow. The S&P was down exactly 61% of the previous low at 2952. I mean, they were just, you can't make those numbers up. And, we've rallied, 35 handles now in the S&P since that bottom is in. So it's a pretty important thing to keep in mind. So that's just watch it. It's going to be interesting, because you can't make these things up. We'll just
wait and see how they all end up. But that's what we're watching, at least early this morning. Okay, taking the crude oil. We've had a little bit of a bounce here off the bottom. We rallied about $1 a barrel, which is not very much. I mean, the first resistance on this would be the 382 retracement in crude, and that would take you up into the area of about around 70. That'd be up about another $1 a barrel. That would be $2 a barrel off the bottom, coming in around 70.40 in the crude oil. That would be a real interesting spot, you know, to take a look at, and that's one of the things that you might want to watch, because I think you've had a major top form in crude oil, gasoline, and heating oil. We featured those in the letter this past week, and what we're having now is what they call is one of these little kittens is bouncing off the mattress, as they say in the trade. But anyway, this is a very bearish longer-term picture in the crude oil. It had very bullish factors to make it go higher, and then it couldn't. And so what we're getting now is a relief rally after the market has been down so much. But it's violated all of the major fib points in both crude oil, heating oil, and gasoline. All of them were just, you know, really set up to have a tremendous break. So that's a something that watch the rally, because that's going to be, you know, real interesting what happens with some of these things as we go through and look at more of them as we look at them each day. Okay, so we got the stock markets up about 150 or so. NASDAQ's up about 80. Wow. Down 212 and then up 80. You got to love this stuff, folks. These are really great. These are really big moves. We rallied 35 handles off the bottom in the this is the kind of action that you really like to see. Anyway, let's just wait till what we call amateur hour, which is that first 45 minutes to 1 hour. See where it is after an hour, and then you'll have a pretty good idea of what it's going to do for the rest of the day. Regarding the Treasury bonds, we've had a couple questions. You know, we hit that perfect 61% retracement down there. And any move below that 136 in the Treasury bonds means that they were going to continue on with the move to the downside. We did get as high as almost 139. That was our target. Actually, the target was 139.16. We only got to 130, I think 139.01 or something like that, and then backed off. So those are just some of the ones that we're keeping an eye on. So that's really what we're watching so far this morning. The Treasury, excuse me, someone's asked a question about the soybeans. Folks, we've had it. Let me just get the hourly chart in beans up here. You'll be able to see, you know, what we were looking at here. You'll notice that we're almost at a 78% level here in soybeans. Let me put the number in so that you'll be able to see it. That comes in. There was that number we were talking about is at 858. So keep an eye on this. Let's just get this up here so you folks can take a look at it, and you'll see that it's pretty much spot on to looking at it. We'll see whether that's going to be watch. Yeah, 40 pips is a nice bottom in the euro. That's what we call a DCB, folks. It's a DCB. You figure that one out on an acronym. Anyway, that's nothing more than just take a look at that euro, because from yesterday's high to that low, the exact 61% retracement comes in at 14.90, and the high has been 14.88. So if we get above that, they might have something. But until that happens, it doesn't look like it's going to have very much in its favor. But that's what we're kind of looking at this morning. So keep an eye on it. It's going to be real interesting to see if we're going to be able to get through that key level. But the beans have a lot of support at that we think there's a lot of support at the 558 level. So far we've been to, we did hit 558. Excuse me, folks, 858. Boy, 6:30 in the morning comes pretty quickly here. All right, let's keep an eye on one other thing that we're watching, and that is the British pound. We already mentioned that, of course, that the importance of that 130 level. So far, the low has been 130.16. As long as we can stay above that, you know, we still have a chance for the pound to rally. But anything below 130 takes it, you know, way below the 129, 128 level. So those are just a few of the ones that we want to, you know, watch very, very closely. So that's that's neither here nor there. So we'll see what's going on. The gold has still had a lot of resistance up here at that 136 level. We've been up there like 5 times. Silver's still lagging badly. All it could do today was make a 78% retracement of that high. That doesn't mean it can't pick up at any time, but it certainly could. So we'll watch these as we continue looking at some of the others that we're watching. Continuing higher right now, we're starting to pick up a little steam in the stock market. We're up about just about 200 now, almost. And so we're reversing all of yesterday's losses. And so that makes it look like it's going to be going a lot higher yet. So we'll keep an eye on that. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!
No matter what kind of trader you are,